And a good Monday morning to you. Record-setting day on Wall Street. I know you're probably not tired of hearing that for your 401ks and IRAs, but where could we be headed? Let's hear the very latest live here on the floor with me, Tom Hulick, CEO, Strategy Asset Managers. Thank you for being with us. We just were saying down NASDAQ, S&P, and even with the tariffs and the worries about China and this and that, somehow the market keeps going higher. What do you make of it?
Well, Nicole, thank you for having me. It's nice to be here today. Happy Halloween week.
Yes.
There's a lot of momentum going into the market. We're a separately managed account manager, and our momentum strategy is really taking the lead this year. I think that the Trump tariffs are causing people to react in a way that they didn't expect at the beginning of the year. It's actually going to be a tailwind for us. And so we're focused more on the end of the year and the momentum of the market going in with technology and infrastructure, but I think that the tariffs are tailwinds right now.
And at this point, I'm talking about the record highs, but I can say that for 3 years in a row. I mean, we've had a bull market. If you were buying the dips the whole way, you did incredibly well. Do you continue to buy dips?
We do. We've been talking to our clients about taking some off the table because the market's been a little bit overvalued at this time, but we buy the dips. And, as an actively managed manager, we're focused on specific areas. As I said before, technology, infrastructure, and the reindustrialization of the economy for us. But we're very optimistic going into the end of the year, and I think that the momentum can continue. I do think that we're at the beginning of the next generation bull market.
So it's interesting. You mentioned that parts of the market are overvalued. What's overvalued?
Well, I think that the S&P 500 and the earnings specifically we're a little bit frothy right now, but that's what active managers do. We take a look at specific sectors. We'll look at specific stocks, and we've focused on specific names. Let's just say, how about Broadcom?
Right.
AVGO, a great company to own in the chip sector and the AI sector. But we think that it's a stock-specific or a stock-picking market right now.
And AVGO is sort of, when we say Mag 7, sometimes we were saying Mag 7 plus 8, 8 Broadcom, add that in there because so often, and it's been an incredible name. It's up 87% in 6 months, but you still think it has upside potential. Is that because of what we're building out going forward?
I do. I think the United States, as well as the world, is entering into a new age, and Broadcom, as you know, is at the forefront of microprocessors and also the AI revolution that's there. There are partnerships that are going in place that they're not really mentioned about Broadcom. It's one of our top performers this year, and kudos to my portfolio manager, Joe Traba, for picking it out.
Yeah, good one. How about Ciena? Why Ciena?
Well, if you think of Ciena, think fiber optics, okay? Mm-hmm. And when you think about AI is really just the brains out there, but the Ciena and fiber optics, that's more like the nervous system. So when you think about the build out of infrastructure that the United States and the world is going to go through, you've got to build out the 5G structure. And specifically, Ciena is going to benefit from it. That's another one of our top performers, Ciena, CIEN, and we like it.
It's interesting because you're looking at AI. Everybody talks about the Mag 7, but these are ways to use AI in a little bit expanded, right? You mentioned Broadcom, you mentioned Ciena, and then Intuitive Surgical goes in there. Tell me about that.
Right. Well, Intuitive Surgical, symbol ISRG, robotic surgery, the Da Vinci. If you've had a surgery in the last 10 years that resulted in maybe your gallbladder or maybe your appendix, that was probably one of the options that you had out there. But I think that, I would even say 100% of surgeries in the next 10 years will have some type of robotic influence, and the Da Vinci machine and Intuitive Surgical is going to be there. It reduces error. human error. It also reduces infection, and also you can do it remotely. So if you think about remote surgeries around the globe, somebody in Africa needing a surgery, we could do it from the United States and help somebody out over there.
Well, it certainly seems like you think the path of least resistance is still to the upside. You're buying dips, you're not as worried about tariffs.
We are.
But are you at the same time worried about potential headwinds on the horizon, and what could those be?
We do. The headwinds are interest rates. The potential for the Federal Reserve to miss. Again, we do think that the Fed will cut interest rates this cycle at the end of the week. We think there's going to be another cut following that. We think employment is a signal out there, and we see some chinks, in the economy. But right now, the economy's doing well, and we're just paying attention to signals out there.
The Fed, are you worried about the Fed's credibility? I mean, are you thinking that when you say they could miss, what do you mean? That they're going to be making the wrong moves or no moves, or what?
I follow the Hoover Institute, Kevin Warsh. He's a candidate for the Federal Reserve.
Right.
Warsh is very optimistic about the future of the U.S. economy, and the stock market is not the U.S. economy, but it does send signals. Missing it, I don't think they will. I think that the debt is so high at this point, we need to bring interest rates down. And another thing, that mortgage interest rates are just unattainable right now for somebody as a first-time home buyer. We've got to get those rates down so we can reinvigorate the mortgage market and get first-time home buyers back in.
Yeah, I mean, everybody got so spoiled with the low rates for a while. I mean, our parents, nobody remembers, I mean, they had 18%. I mean, or something insane like that.
I've heard
It was above 15%. Our parents really sort of struggled through. Our generation, though, has gotten used to lower rates without a doubt.
Let's hope we don't see that again.
Yeah, oh yeah. Tom, you're absolutely right. Tom Hulick, thank you so much, CEO of Strategy Asset Managers. Thank you. Good to see you.